Okay, can you all see what I'm seeing? Lovely pick. See triangles. Yes, you will be able to see triangles soon. Okay, first we're going to be looking at reversal patterns. Okay, now there's three reversal patterns. This can be head and shoulders, double tops and bottoms, and reversal days. Now I'll show you about reversal days. Now what these reversal patterns are saying basically is stop. We've gone far enough. We're in a trend. We want to stop and reverse the trend. So this is what we're looking for. Now these reversal patterns come from a prior pattern. A prior trend must exist. The larger the pattern, the greater the move. Now a topping pattern takes a shorter time to develop than a bottom. This is because markets fall very, very quickly, and yet when they're building a base, they're a lot slower and they go on volume. Okay, so now we're going to look at a head and shoulders top, which I've put on to the Nasdaq because that's quite a good pattern at the moment. You can see there where I've got the left shoulder. Can you see that? Hello? Fantastic. They can't see me, Rachel, but it's okay. The computer guys have arrived. Yay! Okay. I've got the left shoulder there, I've got the head there, and you see there where we're forming the right shoulder. Now, in a reversal pattern like this, what you're looking at is that point there is the break point, and the market should then move the height of the head to the neckline. Now, what I do is I preempt a move. So I would sell, have been selling up to 28.10 on the assumption that the market will complete this head and shoulder and it will come lower. Now you can do that, there isn't a problem with that. It does, you know, it means that you get all that move, as well as if it breaks you get all that move as well. Do you understand? Can you understand? Fab. Okay, we're just going to try and find the webcam. Right, we're going to leave the webcam for a minute. Okay, so we can all see that head and shoulder top. Okay, now that's an extreme. Yes, it is. It's exactly that. I have a tight stop because you can on these patterns. Okay, you need, especially on something like a weekly chart, you need to be able to put a very tight stop into it, and you're anticipating that it's going to go lower, so your stop can be quite near. Keep to the slides, right? Okay. Now, we've got a minor trend. So you have a long-term trend, short-term trend, blah, blah, blah. This is a minor trend. You can see here the same sort of thing. Shoulder, head, shoulder, down. Preempt it. Preempt that move. That could also be a double top. But preempt them, catch the rest of the move down, and you don't have to wait for the neckline to break. Now, this is where we had a head and shoulder bottom in cable. I've done a longer term chart because I wanted you to see that it had the prior trend. But if you look at this chart, you can see where it was an actual break point. We went up, we didn't come down, and we went to the exact measured target. Now at that point, you know that's a good resistance level. You know you have your measured target from the head to the neckline. Trump it up a bit, it comes in about here. So you miss the last tiny bit of the move. It doesn't matter. You're only looking for the height of this point to this point. So that takes that to there. So this is how you can make money preempting these Head and Shoulders. The trouble with Head and Shoulders the trouble with these Head and Shoulder patterns are that a lot of time they look like they're going to play out and they fail. And when they fail, obviously you know pretty soon, and everything's all okay, because your stops are that tight. Now the other market, the other topping patterns, is a double top. Now I put this long-term chart on this thing because I wanted you to see the double top. There's two reasons I wanted you to see this chart. It's of the S&P in 2001, where it topped out at 1574. We made a top in 2007 of 1586, and look where we plunged to. The reason I'm doing this is, if you can see here, I connected at the time that low to those two lows, and that there was the low. You can see how that was exceptionally went well. I mean, that trade for me was just probably one of the better trades I've ever done. Well, I did catch that move down, but that particular one, because everybody was talking the S&P down, and why is the Head and Shoulders down as it closer? Yeah, it is crowd psychology, if you like. And yes, you can have inverted Head and Shoulder patterns, obviously, because if you look at the one I did before on the cable, that was an inverted Head and Shoulders. So a Head and Shoulder top, you can't see me, I'm writing this here. A Head and Shoulder top is what I've shown you. It's at the top where it looks like Head and Shoulders. The other one was an inverted Head and Shoulder pattern. Why do patterns repeat? Tried, true and tested. I think that is the key. That's why these patterns repeat, because they have been around for so long. God, yes, well, maybe so, but I don't like to say that. But these patterns have been around for so long that people just know that's what they are, and they look for them and they search for them, and that's why they play out so well, because everybody's looking at the same thing. Now you would think that would make the market go against the trend, but it doesn't. They always play out. Well, not always, otherwise we wouldn't have him crying up there. Short-term double top. Now this is on the gold market. You can see where the market topped out here, 1, 2, 3, but we only had a proper double top there. Down we came. Now we had we had a reversal day in the gold. Now I'm going to show you reversals in a minute, but this is a clear example of it. The market goes down, closes low, the next day we have a lower low, and then up we go again. It is hard to see Head and Shoulders, to be fair. It's only because I've been doing it for so long that I know what to look for. I see Head and Shoulders all the time, but sometimes other people can't see them. You have to look beyond the designated left shoulder should be at this point, and the right shoulder would be at that point. If you can see a bottom, a lower bottom, and then another higher lower bottom, go for it. On these patterns you have very little to lose because your stops are so tight. Yeah, of course it looks blurred. You need 3D glasses. I need glasses. I tell you, I've nearly had a heart attack today. Thought I was all doing all right. Right, so we've got the short-term double top. We have a medium-term double bottom on the dollar CAD. I looked for these examples. I've been searching for them, because not always are they there. You've got a double bottom on the Canada. Up we went. You can see here, then we made a double top. Where people's problems is that the double top pattern, they always say that the right hand one, so there's your left hand one, that's your right hand one, should be lower than. Well, that doesn't happen, okay? You can go at least 25 to 30 pips above this high here, okay? I'm saying this now because I know now that we have algo systems that go looking for these stops. So this is why you now get these extensions of tops, if you like, but it's not by much, and you can still make a lot of money. You know, it's worth risking 20 pips by selling here to catch that where it went to the 55-day moving average than not. Now, I've shown you these are more, the key day reversal patterns are a bit difficult, I suppose, but these are where you get a higher high, a lower low, and a close below the previous day's low. Now, I've got one here, but I've got it on an hourly chart because it looked better. But can you see that? Now, these can be anywhere. These can be on a 60-minute, 240-minute, daily, weekly, whatever. But you see there where that high was higher, the low was lower, and the low closed below the previous day's low. Can you understand that? Yeah. Everybody else catching up with me so far? Well, all of it. Okay. Here you have the market going up nicely. There it is. It's going up. All of a sudden, no, it isn't. You've got to be able to look for it. You've got to be able to preempt the head and shoulders, Ahmed. I mean, that's... I'll go back. If I've got time, I'll go back and show you. But we're on the key reversal day now. You can see the trends up, 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 up. We spike up there, right? At 125.97, we go down to 125.00. You can see the previous hour's data. That is a clear reversal hour, which then went on to take that down towards the 21 period moving average. It actually went lower, but I wanted to capture that bit for you. I'm still talking like you're actually on. What did I say? Yeah, tell you what, that's a very good question, Philip. But as I've been doing this, what I'm going to do, okay, I'm going to get through the course first. We haven't got many more slides to go, and then I'll go back and I'll look at cable, look at euro, I'll look at anything you want, okay? So that's the key reversal. Now we also have an island reversal. Now, I couldn't find any, so I had to do these myself. What happens is you've got a strong uptrend, up, up, up we go. The market opens higher, gaps higher, closes higher, the next day opens lower, and down we go. Yes, you can any time frame, 5 minutes to an hour, whatever. These patterns are the same ingredients, if you like, for want of a better word. They're the same. What's the word? Criteria. You use the same criteria. No, I've only done, no, for the webinar I've only gone down to an hour. I haven't, is that the kicker pattern? Oh, I've got no idea. Never heard of the kicker pattern. I understand why it's called the kicker pattern, because it has kicked everybody up the, where you kick them. So anyway, and the same applies in a downtrend, okay? Down we go, we gap lower, we open higher above the previous day's high, and that's a key reversal, an island reversal, okay? That's quite good. Now, the next one is continuation patterns. Okay? A continuation pattern is when the market pauses for breath. It's like going along, it's gone up strongly or it's gone down strongly, and it wants to just take a breather. And this is what a continuation pattern does. It goes, there are many that I'm going to show you now. I'm not going to show you every one, but and that they're like a tug of war. Now, normally the trend followers are the winner. So if the trend has been up and you see a continuation pattern, the chances are 90% of those of the next move will be in the direction of the previous trend. I don't think FX Street's going to let me have 15 minutes more. I'm really sorry. I read it totally wrong. They might, I don't know. Let's see. They might tell me to shove off in a minute. Right, these patterns take less time to develop than a reversal pattern. Very, very important. Very, very. Okay? That's it. I'm running out of breath now. Oh, can you? Oh, well, we'll see. Yeah, I've been held up before because of that. Let's see if they kick us off. Right, it's like me. I've just done a continuation pattern. I've paused for breath. As I said, they're very much like a tug of war. They take less time to develop than reversal patterns. That's the key to these patterns. Okay? Now, we have flags and pennants. In an uptrend, this is what you're going to get. You have a flag. You see, you get a succession of lower lows, lower highs. If you look at it, it seems quite obvious that it is a flag. Now, the measured target from that flag is this, the length of what we call the pole. Okay? Call it what you want. It's still an upward move. So it's the measurement from the upward move. It pauses for breath. We have lower lows, lower highs. We break out. We then should go to the top side and go up by that amount. So if that amount is 75 pips on the breakout of that point, you add 75 pips up. That's your measured target. Instead of doing 75 pips, you put it in at 69 pips to make sure, because everybody's got the same idea. That's why you always go under the resistance and just above the support. If you look on the right, you can see the same thing. The market's in a downtrend. You get higher lows, higher highs, then we break. We're going to go the length of that. Again, 75 pips, 75 pips. In an uptrend, this has got a little pennant. This is when you can have lower lows, higher highs. You can see that we're looking at lower lows here. You have higher lows here and breakout. Again, length of the pole. Same thing. It's pausing for breath. It has higher lows. It has lower highs. Goes back into the direction of the trend. Here you have what I've just said, the minimum price objective. There's the pole. There you have it. Now, is there any questions you need to ask me now about flags or pennants? Hello? What is the reason behind the pattern? Do they work, or are they prone to false moves? What if flag on trend line? What if flag on trend line? Well, it doesn't. Well, it is on a trend line because you've got to draw it in. I mean, it's got to have 3 points on it. Okay, and they are they're very, very subjective. But these patterns do work. You know it's on a trend line because when we've done trends before, you can see that these you have to put 3 points on, otherwise they don't really work. Now, the best time frames, depending on if you're a day trader, you get some fantastic patterns, flags and pennants on a 60-minute chart. I don't go any shorter term than that. You can, I suppose, if you want, but you don't normally need to go much. Euro, yen, British or bearish. I'll tell you when I've got to number 20, because I've done euro yen today. Right. Now, so yeah, they're going to be on a trend line, but they're still going to break. But with the trend line, instead of drawing a parallel line or a trend line that's going straight up or straight down, you're looking for these patterns to develop. And you can see them. You can see that after a sharp move, the market starts to calm down, go sideways, go down slightly, go up slightly, and within that going up or down slightly, you can make these patterns work for you. And they do. They really do work, and they're really important as well. Now, I've got rectangles here. Exactly the same thing. This is where they don't exactly the same. Look, you just draw two parallel lines. That's it. The market stays within a rectangle. It calms down. It eases the oversold conditions, and then it goes in the direction of the trend. So in this case, we went sideways, then down. In this case, we went sideways, then up. Okay? Now the measurement you want. Ahmed, shush about Cyprus. Okay? We're technical today. Technical. I've got one more slide. Now, a minimum objective would be the height of the rectangle. There you go. Now, a lot of analysts, me included, do the length of the rectangle as well. Okay? So you have a minimum objective. You take your profits at the minimum objective. You wait and see if it pulls back to the top of the rectangle, and then you can buy again. Okay? And that's how we do it. It's alright, Mohammed. I'll have a look at it later. Any other questions on rectangles? Leave it alone. You can't leave it alone. Look, you've got to, you know, these patterns are important if you're trading. You've got to have an edge. You've really got to have an edge. You've got to be ahead of the algo systems, you know, and they are searching for these little patterns and whatever. You've got, the market is so huge, and everybody looks for patterns. Oh yeah, definitely Cyprus. Yeah, we'll leave that alone. Right, triangles, another thing. Okay, you have a symmetrical triangle, falling triangle, rising triangle, inverted widening triangle. Leave those alone. We're not bothered about inverted widening triangles because they just look a mess on the chart, and I have never found one that actually works. A rising triangle, yes. A falling triangle, yes. Symmetrical triangle, yes. But the other one, not so much. But your measurement is the same. You measure this bit here on the breakout. So, 50 points, you add 50 points here, up you go by 50 points. Exactly the same on the downside. Exactly the same here. Your measured targets are never different. You always measure the start of the triangle to where it breaks out from the apex. Okay? And you can see here where it went. Oh God. You can see here how the triangle played out, and once we didn't actually get to the apex of the triangle here, because you just drew the lines on, and down we came. Little pattern here, little breakout, up we go. You can see here where you'd see the falling triangle and the symmetrical triangle, and then down we went. Okay, well that's the end of my webinar. As such, my 20 slides I had to give you about patterns. I've never done patterns so quickly in my whole entire life. Now, if you'd like me to have a look at anything else, very, very quickly, I will do so. Yes, FX Boyke. It's the widest part of the triangle. You measure the widest part of the triangle. Okay. Well, let's have a look at cable then. Oh, there we are. Okay. Well, look. And here we have a double top. Fancy that. So I'll just get them off. Okay. See that? See it there? 151.78. 151.88. Okay. We preempt now. Now you can draw this across here like this. Okay. And you would be short of cable. There are other reasons. We are approaching overbought. You will be short cable, and your stop would be above the trend line, so you would put it around the 152.15. Oh, in my experience, what percentage? I'd say 85% of continuation patterns work. They are pretty good. I mean, look at that little inverted head and shoulder pattern there. You know, and up we went to its target. Oh, I use CQG. I've used it for many, many years. I've used Reuters as well. TraderMade, not so good. But CQG is good. The new e-signal, no, it isn't free. It's very expensive. AB, where's that webinar? FX Boyke, what do you mean? Have I missed someone? Right, so this is where we will be preempting this move and saying, do you know what? We've mucked about a lot today. We're going to go back, and we're going to at least go back to the midpoint, which is around here. So we're looking at the market coming back to about 151.15 to 151.10. Okay, so we'll look at Euro, see what we can find in that one today. I made a bit of a... I have so many lines on my chart. Nothing really, apart from the reversal day. If you look at the reversal hour we had, remember I said, you come down, you close lower, this one starts and then it closes higher. That's your key that all is not well to the downside. New Zealand yen. Yeah, okay. Let me just do this. Right, can you see that? We've come down, we've made a new low. This one's gone lower, closed higher, sends a signal, a big signal to the market. We are going up. And look, we come within striking distance of the 50% retracement at 129.76. We're at 129.73. I personally think that's a really good example of how you can make money looking at these markets and not looking at the TV, listening to Cyprus, Greece, or whoever else they are talking about to the day. CQG is not a free charting package. It costs between £800 and £1,500 a month. So anyway, so on this one, you've got it. You would have got it on the way up. You wouldn't then have got out of your longs just in front of that 129.75 area. You would be short now. You would be looking for the market to come back down to the midpoint, and I think that's the 23.6% retracement, and that is 129.06. Fab. Now, who wanted the... Exactly. TV are all sensationalists. Can you... I wasn't on a siesta, Boyke. I wasn't on a siesta. I was looking after my sick son. Dollar yen. Golf course. I don't play golf. No, I don't like it. I've never played golf. Okay. So you'll have to bear with me and my, where's my breakout webinar? I've just showed you where the breakouts are. They're when it goes above that little trend line. Dollar yen today. Look at that. Look at that. Okay. We've come down. We've come down over this. We've got that. Get that out of the way. I don't know how to get that out of the way. Let me try and move this. Right. You see this? The reversal day. Okay. Look at it with this as well. There's your reversal day. Now you can see that the stochastics had already changed to looking bearish. You're absolutely right. It did look like a triangle. I actually did have my little lines in here as well. I had that. Okay. I thought it was going to break up euro yen, but it didn't. It broke down. But it's where it broke down to. Look, we held that moving average. We started to make another little trend. When we've gone up and come down, we've still held that trend line. Okay, so this whole thing, if you look at it, this whole thing could be a triangle. Sangria. I didn't have any sangria. Oh, I think I'd find it a bit of a struggle, to be fair, to do a whole webinar on breakout points. It's, you know, on patterns, I've shown you the break points and where they break out. I don't really think I could do 45 minutes talking about breakout points, but I'm certainly, you know, if I'm asked back again after the I can add other things. Yeah, I can add other things. Well, you know, depends on if people want them or not. But I'm open to offers. Yes, my moving averages are 9, 21, 55. My settings for stochastics are 10, 3 and 3. And these are slow stochastics. I could do a webinar on breakouts, moving averages and stochastics and lump them all together. I think that would work. So look, it's 15:57. I don't know where FX Street are, or if they're. I use both, Boyke. I use both, simple and exponential. Yes, because you can get, if one gets, right, okay, 3 minutes left. Yeah, I use both, because I think you get a lot of information out of using what the market looks at. Some look at exponential, some look at simple. There's more now. There's a smooth moving average. There's a, do you know what? I can't only remember what they all are now, but I know they're. So I only look at the two because I think it's rude not to. Yes, they've got the weighted moving average. There's loads of them. There was only one when I started out. It was a moving average. But we've progressed, and there you have it. We've all moved on. But there's so many moving averages you can look at. Do you see what I mean? And to look at them all would be horizontal line. A horizontal line is this. See that moving up and down? That's a horizontal line. Exactly. Right. So, the coloured. Oh, the colour. They're Fibonacci retracements. They're my Fibonacci levels that I put on every day. Okay, well, look at that. You can see that head and shoulder at the bottom. Where's my trend line? There you go. There you go. See? Shoulder, head, shoulder. And whack that out a bit better for you. Can you see that? A point, a head, another point. There's your neckline. You could have even done it actually sharper, really. No, probably that one. But whatever, you could have done two, because look, when it come back, it only come back to here. But you see, once you can preempt that, you could bolt that up to the neckline, it come back, hit the second neckline, went up, broke straight through it. Here's your little box at 1, 2, 3, 4, 5 and a bit. There's your bit. 1, 2, 3, 4 and a half. There's your measure target. No, that's fine, FX Street. Thank you so much. Thank you so much for allowing me to muck up, really, and to still do this. Okay, thanks, guys. See you all again soon, okay? No problems. Ta-da. Bye. I'm waving to you. Do you believe that? I'm actually waving. Yeah, me too. You had a little operation Monday. Okay, look. I don't know how to stop this.